Guys, Michael Edward with True Trading Group. This January 2nd, the first day of 2018, a very, very small green day for me today. Wasn't a lot going on. It was a slower day. There was a couple of isolated moves, a couple of decent trade opportunities that some of our other moderators in TGG were able to capitalize on. But for me, just a very, very small green day. And I expected today to be slower, guys. Usually the first day of the year is a little bit slower. You have people that are still traveling, and some people still dealing with the New Year's hangover. So I expected a slower day today. I spoke about it in our pre-market game plan, and we generally saw a slower overall day in the markets. And what I want to talk about with this video is not trusting lunchtime breakouts. Stocks that break the high of the day or attempt to break the high of the day during lunchtime tend to fail more often than they'll break, hold support, and then give you continuation and give you that follow through as strong volume comes in and the volume starts to increase. Okay. One of my rules that I set for myself is to not open a new position during lunchtime. Lunchtime is around 12 o'clock in the afternoon Eastern time, 12 o'clock in the afternoon till about 1:30, 1:45. That's typically your lunchtime time frame. Okay. Stocks that break the high or attempt to break the high during that time fail more often than not because volume is lighter. Okay. And a lot of times those breakouts will end up failing, or the high of the day will not break and the stock will pull itself back in. I noticed many years ago that most of my losers were coming when I was chasing lunchtime breakouts. Okay, I keep a journal with all my trades. I tell all of our TGG members to do the same. I suggest you all do the same as well. So you can go back every month and look at all of your losing trades, look at all of your winning trades, and try to find patterns. Okay, maybe 75% of all your losing trades are all the same setup or the same pattern that you think you're seeing, but you're obviously not seeing it properly, or maybe you're doing something wrong, and you can avoid that pattern and avoid that setup the following month. So many years ago, I realized that a lot of my losing trades were coming when I was chasing lunchtime breakouts. So I set as one of my rules for myself, I said that I'm not going to open a position during lunchtime. Now, if I add to a position, that's a little bit different. Maybe I get long in the morning. I add to it during lunchtime because there's something that I see. Maybe the stock's holding above VWAP. It's holding above a Fibonacci level or some other setup. That's different. But I try not to open a new position during lunchtime, and that'll prevent me from chasing lunchtime breakouts. An example of the weakness you see in stocks during that time frame, what we saw in NLST today. Okay, I got long NLST at 36 cents early in the morning. Okay, I did not get long in the afternoon during lunchtime. I got long in the morning because of a TGG triangle setup. And I'll take you to the chart now, and I'll walk you through the TGG triangle setup, what made me get long, and then where the stock failed. I'll walk you through it right now. So here's NLST. Stock gaps up, okay, puts in that initial high of 35 cents. Here's your initial high of 35 cents. The stock pulls in, then explodes, breaks through that high on a real nice strong increase in volume. When that happens, we take a line, we draw it across that initial morning high, and then you can see the stock pull in and hold support right at that previous morning high and very quickly bounce off of that support level. Puts in a lower high, okay? Then goes back down to test that support level, holds support again, bounces off, and then another lower high is put in place. So then you can now draw that descending trend line that creates that triangle pattern, that descending triangle as the stock makes lower highs, bouncing off that support level, and your TGG triangle is formed. Okay, guys, I got long right here at 36 cents. Okay, this is where I entered NLST. All right. You then see the stock break out right here of that downtrend resistance line, but the volume never kicked in and the stock never was able to get its footing and just kind of traded sideways. Okay, never got going. You would like to have seen the stock do this, okay, as soon as it broke out of that downtrend resistance line. This is what you would have wanted to see the stock do. Okay, if the stock made this move and then tested that high of the day at 11:30, it would have broken the high and given you that move and given you that continuation. That's the trade I was looking for, but that didn't happen. Okay, the stock ended up waiting until 12:30, 1 o'clock to start making its move right in here. The stock starts to make its move. You start getting an increase in volume. Look, guys, here's an increase in volume. Here's an increase in volume as the stock makes its way up to test the high of the day, which at the time was 39 cents. I said live in chat right here. I was just, actually it was right here. It was like just after 1 o'clock. I said, guys, I'm not complaining because the stock is moving higher, but I really wish the stock would have made this move either at 11 o'clock or 11:30, or would have waited until 2 o'clock, 2:30 to make this move. And I came on live in chat and I explained why I do not trust lunchtime breakouts, and I don't trust stocks that go and attempt to break the high or even do break the high during lunchtime, because they tend to fail more often than not. And the reason is because the volume is lighter and you don't get that continuation and you don't get that follow through. Okay, I actually I tried to sell 25% of my position. I had 35,000 shares, and I tried to sell 25% of my position at 39 cents, but there was a lot of stock for sale at 39, and I ended up not getting filled. So I didn't get any fill at that 39-cent level. Hindsight, I probably shouldn't have been so greedy with that take profit, because this pattern, your first target on this pattern is the high of the day. So I usually take some profit in front of the high, and then I hold on to a core in case the high breaks and you get that continuation, you get that push, and you get that follow through. That's how you can really, really get paid with the TTG triangle pattern. And I don't really know the reason, guys, but for some reason I had my order set at 39 cents. I just didn't get filled, instead of having it set at like, 388 or 389, and I could have gotten a fill to take some profit off the table, but I didn't get any fill. And you see the stock fail after it tested the high of the day right here, and it's because it tested it at 1:30 in the afternoon, did not have enough strength to break through the high of the day, and you see it pull in, fail, and then kind of just die out the rest of the day, and really never got going again. Okay, I ended up exiting my position. I believe it was right here. Yep, I exited my position right here, guys, at 362. So not just above where I bought it. And it's because the stock was just it was just dying out. The stock was just weakening. The volume was decreasing. We came out of lunchtime and the volume was lighter at 2:30 than it was at 1:15. And that is a negative, it's a bearish sign that a stock has less volume at 2:30 and 3 o'clock than it did at 12:30 to 1:30. Okay. So I decided to just exit the position and make sure I didn't take a loss on it. Very, very small gain on that NLST, basically break even. And it's really because of the time of day. Now, if this stock made this move, guys, if it made it here, or if it made it here, it probably breaks the high of the day. And that is why I do not trust lunchtime breakouts. It's why it's one of my personal rules is to try to not enter a brand new position during lunchtime, because that will prevent me from chasing a stock that makes a brand new high or attempts to break the high during lunchtime. Okay, because if you chase this stock, you chase this NLST, and you got excited because it was starting to push, the volume was starting to increase, it was testing the high of the day, you got excited, you got long right here, you lose money. And that's not because it's a bad chart setup. The chart doesn't look bad. The chart looks really good. It's very hard for traders to stay away from these trade setups because the chart looks so good. But then when it comes time for that volume to kick in, and it comes time for the stock to go from second gear into third, into fifth, it never happens. And the stock fades away, pulls back, and you lose money. And that's what I noticed in my trading career many years ago by keeping that journal. And that's why I no longer trust lunchtime breakouts, nor should you. I'll see you guys in chat tomorrow.